The euro gapped down to start the week, but so far buyers are stepping in. So I'll have all the details in today's video, including where I think this market could be going and also the latest on the DXY. And by the way, the DXY is a big clue if you're trading the euro or the pound or really any major currency pair. So taking a look here, guys, at the EURUSD daily time frame. And by the way, if you do enjoy this content as we go through it, be sure to subscribe to the channel for daily videos and also smash the like button. It takes a lot of time to put these videos together and a few seconds to like it, so be sure to do so. So looking at the euro on the daily time frame, we talked about this trend line here off of the March low. It actually extends from that February low, late February. You can see that we have the market holding above it so far on a daily closing basis. Now, we did see the market gap down. We saw the euro gap down here to start the week. I believe this was around like 40 pips or so. And we all know that this was due to, it's actually 65 pips. We all know that this was due to the US bombing Iran over the weekend. So we all know kind of what's going on there with these markets, reacting to that news. However, so far buyers have stepped in. So the question right now is this going to be a significant top for the euro, or is this just going to continue? And we're going to see levels like 116.60, etc. Okay. Now, obviously nobody knows the answer to that. All we can do is just play the probabilities here in these markets, try to find out what's likely, and then, play the odds when the opportunity presents itself. So looking at the EURUSD, there's a couple things, guys, that I want to cover here on this chart. And then we'll get to the DXY, which I think is really telling when you're trading these major currency pairs. So obviously 115.30 is the level that we've talked about here over the past few weeks. You can see that if I go all the way back here to this price action. So from back here, in, let's see, 2021, okay, we've got these lows down here right around 15.30, okay, 115.30, and that's why I've had this level on my chart. And you can see where over here, this served as resistance for the euro, and you can see right here, we got the close above, close back below, resistance, okay? Now, if we look at last week's candle, and this is kind of telling, and this, honestly, guys, when a week ends, what you want to do over the weekend or early the next week, preferably over the weekend, though, before the market opens, is take a look at the weekly chart, because this is going to tell you a lot about where we could be headed, at least short term, early the next week. And what I mean by that is you look at last week's candle, okay? So very small body here. We have this long upper wick, long lower wick. A lot of times, guys, wicks like these tend to get partially filled. So we know that the euro gapped down to start the week, so that filled this lower wick. Now, we still have this upper wick up here, which you can see that, back here, look at this wick here. Okay, partially filled here. The market came back in and fully filled it, even took it out. And the same thing with this wick here. Okay, last week took that out as well. So we have this long upper wick here from last week. And this could be telling because what you'll notice here is I've drawn a level off of the high from right back here in April. So this is the weekly chart. Again, we have the high back here in April. And this intersects with last week's upper wick at a very interesting level. And what I mean by that is if I take my Fibonacci tool, okay, so first of all, I'm going to turn on the magnet here to snap these exactly to the high and the open price down here from last week. So if I take the Fibonacci tool from the high of that wick down there to the open price from last week, you can see where the 50%, and this is really interesting, the 50% lines up literally exactly at this level, okay, which goes back to April, that April high, 115.73. In fact, it is less than 1 pip away from that level. And a lot of times wicks like this, a 50% is a good, rule of thumb that you tend to get at least a 50% fill of these wicks. Not all the time, but it does tend to happen more often than not. So I do find that interesting. And I think that this area up here for the EURUSD based on last week's wick and also that April high, guys, could be a significant factor here for this market. So potentially, with what we're seeing here today so far, this strength, we could see the market come up here, tag this level. I do expect this area to serve as resistance. Whether or not, though, we get the EURUSD selling off significantly or just a minor pullback is yet to be seen. So I think that it's going to be, kind of an hour-by-hour situation, okay? Because what this is going to come down to, like we've talked about in recent videos, is really where does this market close, in relation to the trend line from down here in late February? Because so far, again, we have not seen a daily close below this, okay? I mean, the market gapped down so far this week, and so far it's rallying right back above it. So in my opinion, that's what's going to be telling, as well as 114.40. We've also talked about this area through here. So in order for the EURUSD to signal a major top this year, it's going to have to clear both of these, okay? We need to see a significant breakdown from these areas. Now, you can see where, again, so far today, we are getting a very aggressive rally. If we go to the 15-minute, you can see that we're well above, 115.30 now and climbing above this high from last week. So in my opinion, we are probably headed up here toward about 115.70 or so, maybe 115.80 in this general region. And one reason for that, I talked about this over the weekend, but looking at the DXY, first of all, let's start on the monthly time frame. Then we'll get down all the way down to the hourly, and I'll show you exactly why we are seeing the US dollar pull back today, at least technically. Okay, we all know fundamentally why it's pulling back if you've been watching the headlines, but technically I'm going to show you why this market is pulling back. So first we have the monthly time frame, and we've talked about this before, but you can see where the DXY is coming off this area around 97.7 that we've talked about. And this is a significant support for the DXY because this level goes all the way back here to 2010 and 2011. Okay, so a significant region here for the DXY. And this is where you have to ask yourself, do you want to be getting bearish on the US dollar, at least long term, when the market is coming into an area like this? I mean, sure, we can get pullbacks like today, but do you want to be getting bearish on this market long term when we know that the DXY is coming into that massive confluence of support down here around 97.7? And furthermore, like we talked about last week too, the market did close above 98.30. So this was a significant level here I was watching. Not as significant, obviously, as trend lines, like we watched from the February high or 97.7, but this area around 98.30 is a significant region for the DXY because it did reclaim this last week. Now, you can also see where the DXY is still struggling with this trend line from February. We've talked about this as well. But the one thing I want to talk about today, guys, is this area I mentioned over the weekend in the forecast. So if we go to an hourly time frame, okay, and I'm going to turn on TPO, time price opportunity. This is essentially a volume profile of the DXY here. And what you're going to notice, I've taken off the blocks just to kind of clean things up. But what I want to focus on, don't worry about the value area high or low or POC. But what I want to focus on right now are these single prints, these red areas. And a lot of times, guys, these single prints serve as support or resistance in a market, but they can also serve as what are called, what I call magnets when a market gets closer to them. And the reason for this is because these areas are essentially expansions out of the first hour of trade. So you can see that today we actually have one forming up here, this buy side single print up here. However, this one down here has existed since this expansion out of 98, okay? So this right here was the break back above 98.30, and you can see we got these lows through here. Now, the market never came back here and tested this single print down here in this region, aka an imbalance in the market, and we often see this tagged. Okay, you can see where we had a single print that formed. If you look at the history here of this chart, you can see where we had several single prints over here during this consolidation, every single one taken out. You can see over here, we had this single print on the way down and the market came up here, took it out. Same thing over here, single print on the way down, came up here, took it out. So you tend to get a market, especially in a range bound environment like this, taking out these single prints. So one thing I mentioned over the weekend is that we could see the DXY come down here, take out these lows and test this 98.30 level. In fact, this was my ideal scenario to start looking for US dollar longs. So even though we are seeing a very aggressive pullback here, if we do see 98.30, guys, over the coming, really hours at this point, with how aggressive this has been, I do think that sellers are going to get themselves trapped down here in this area, shorting the US dollar into this region, just because I do expect buyers to defend 98.30 if we see it tested here over the coming hours. Now, what's going to be key, though, for the DXY, similar to the euro, is really just a convincing close, a sustained break, really, above this February trend line. Like I said before, we haven't seen the market really clear this level yet. And so you can see where last week just kind of skimmed along this level. But again, we have this open imbalance down here at 98.30 that I really want to see tagged before buyers potentially step in there for the US dollar. Okay, so getting very close to it now as I make this video, guys. You can see where, again, on the hourly time frame, we're getting pretty close down here, currently trading at 98.56 or so. And again, at 98.30 is going to be that key level to watch. And you can see where the euro is also approaching that area up there around 115.70. Okay, so really interesting areas here to watch for these markets. You can see the euro this wick back here, looking at something like the, even like the 15-minute time frame, you've got this high from back here that I think this region is going to be the one to watch for the euro. But again, the question is whether we get, a significant retest from here or a significant pullback from here, or just something minor before we head higher. Okay, so again, no way for me to know that, no way for anybody to know that. But I do think when you look across the board at these markets, this down here is, again, what I mentioned over the weekend is the one I want to see tested, right? Because this was that expansion out of 98.30 back here last week that we never saw tested. Okay, we never saw it tested through here with these lows. So I really want to see the DXY come down here, test this level, and then bounce from there. But we do need to see that sustained break though above that trend line from February 1st. At least I do before I start getting more bullish on the US dollar. All right, so very volatile markets out there right now, guys, but I hope this helped. Again, I am watching 98.30 here very closely. And ultimately, even though this session, today's session is getting, relatively bearish here, the US dollar, you've got to keep in mind that you've got this confluence of support down here, above 97, and then you've got 98.30. And really, when you look at this market, even though it has been trending lower, it's also very sideways. Okay, so just keep that in mind when you're viewing this. And within the context of this range right here, again, in my opinion, this is not the place to be getting bearish on the US dollar. I mean, as an intraday trade, if you were getting bearish up here somewhere, then obviously that's working out well. But I just don't see 98, 97, this region down here as a place to be getting bearish on the US dollar. In fact, potentially just the opposite if we do get that aggressive bounce. Okay, so switching back here to the euro, just to kind of finish up, guys. I mean, for the most part, still a range-bound market here between 114.40 and 115.30, up there toward 115.70. We also have this market trending higher, though. Okay, so respect the chart, respect the uptrend, also respect the range-bound environment. But again, just to kind of wrap up, I do think that this high from back here in April, how it lines up with the 50% of last week's upper wick is going to be something to watch, especially if that lines up here with the DXY coming into that 98.30 area. All right, guys, I hope this video has helped. If it has, be sure to subscribe to the channel, smash the like button. Don't forget to join us in VIP in the Discord group for real-time chat. See the link in the description below for 85% off lifetime access. Trade well out there, guys. I will talk to you again tomorrow.